Yeah, last week I was at the National Mortgage Conference in Vancouver. Was there for just about a week. Was some interesting stuff, meeting with basically most all banks, all the different brokers from around the country and other broker owners. Was an interesting conference for sure. Obviously, it had people were excited to get back together. It'd been since 2019. Hasn't happened in person. And so people were pretty excited to get back together, but there was certainly a lot of talk around the market as a whole, what the Bank of Canada is doing, where the bonds are heading, what others are doing with their investments or with their property, how their businesses are going. And there's kind of a common sentiment across the country from different bank owners. I know a few C-level executives at a few different banks, and they were saying the same thing. A number of economists as well were presenting on it that in short, that the sentiment is that the government and the Bank of Canada is looking for, as Paul put it earlier, blood in the streets. They realize that there's been over stimulus of financial stimulus over COVID coming out, employment too low, and inflation staying too high and not coming down, very quickly. Core inflation as well being rather high and not coming down. So the rise in interest rates is not going to stop anytime soon. And really, the kind of common forecast was that over the next 2 rate hikes by the Bank of Canada, they will be hikes and not stagnant, and likely a full 1% by the end of the year. But out of the top economists that were there, basically that things would stay stagnant through 2023, and early 2024 we start to see the bonds and Bank of Canada lowering prime, kind of in that end of 2023, beginning of 2024, Yeah, so I mean, those that have variable, that's obviously good news. That in the short term, not good news. We'll have another hike this week. I guess this comes out on Tuesday, so this will be when you hear this, will be tomorrow. Probably likely anywhere from 0.5% to 0.75%, and then likely either a half to another quarter in December announcement. But then kind of leveling off for the remainder of 2023, unless inflation continues to rise, which kind of seems from everyone I've spoken to, and we've talked about going to the grocery store and seeing costs there, but they continue to go up, and I think with most business loans, student lines of credit, mortgages, residential mortgages, this will have increased payments by around 60 to 70%. So certainly there's going to be a lot of hurting people, unfortunately, in the coming year. And there will not be any stimulus to help those that are hurting, other than the, really unfortunate.
Thanks for tuning in, everyone. We hope you enjoyed today's episode. Please remember to like, share, comment, and subscribe, because we'd really like that.